a little bit more about us before we get going. So my name is Sara Osterholzer, and I'm one of the co-founders of the Good Business Club, which is a community for purpose-driven entrepreneurs. And I put down good business specialist, whatever that really means, but what that means to me is I've been working with purpose-led social enterprises and also good businesses for the last 7 years. From both theory, you studied international business. I do a lot of reading around frameworks and lessons learned from people who've set up these businesses, and also the practice. So I've been part of 4 different founding teams to date, learned a lot from what it takes to turn an idea into a business that's actually sustainable, especially when you're trying to do good stuff in the world. So that's who I am. Please do connect with me. I'm on Twitter, LinkedIn, and Instagram. It's been really great for those of you who've been kind of on this series with us to have people reach out and share more about what they're creating and what they're up to. So it's what I love hearing about. So do connect with me. I talk about all things good business and motorbike. So if any of those things fancy you, have a connect. We can talk more about that. And a co-host as well today, who I've mentioned already, is Sophie. So do you want to come off mute, Sophie, and share a bit about who you are?
Sure, thanks, Sarah. I'm Sophie. I'm part of the team at Social Enterprise Mark CIC. We're a social enterprise accreditation authority. So we have about 10 years experience now of providing a set of standards for social enterprise businesses, which provides a definition, if you like, of what it means to be a social enterprise and covers the sort of key characteristics of those businesses. I'm delighted to say actually that 2 of our mark holders are speaking today, Heidi from Make an Impact CIC and Ruth from Hisbe.
Great, thank you, Sophie. Yeah, so we've been working together now for a couple of months, it feels like, really to create this series, which I'll tell you a little bit more about in a second. But first, before we go anywhere further, I wanted to ask you, what do you want to take away from this session? I think it's really important for us to be really clear on expectations of what you're going to get in this 1 hour. So I'll let you know if it's something we are going to be covering or not. So if there's some expectations or something you're desperate to get, that you want to make sure it is mentioned, share it in the chat, and we can make sure that our expectations are matched, so you know what you're going to be getting from the session. Hi Adrian, nice to see you again. Where the pot of gold at the end of the rainbow can be found. I will let you know now, Adrian, that we're not going to be covering that in this session today. How to launch my social enterprise. Great, so we're going to be talking about how to sustain a social enterprise on funding. So hopefully that will help with that. As a new CIC, we're looking for some funding to run a pilot program. Great, so one thing I'll just say on that, Sam, we'll be talking about different sorts of funding. We're not going to be talking specifically about kind of funding pots that you can access. I know that's something people always want to find out more about. So we'll talk about the concept around it rather than directing you to specific things, but I'm sure there'll be lots of people on this call who can point in that direction as well. Great, so we've got lots of different things going on here now. I'm going to scroll back up. Great ideas and experiences, hopefully you'll get that for sure. Social investment, great, we'll be touching upon that as well. Awesome, perfect, great, sustainable funding. Let me show you what we are going to be covering today. So the reason that I've been working with Social Enterprise Mark to run these sessions is really to debunk some of the myths and bring kind of practical experience into this conversation. Having worked with social enterprises for such a long time, there are very common questions that come up. There are a lot of barriers that people get held back by, what I now call myths that kind of hold people back. And by hopefully bursting those and giving people more clarity and confidence, we're hoping that you guys will be able to either define this model better, or if it's a model you're looking to select and start, you'll be more confident with what that looks like. And also where to go to get further support as well. So we'll be directing at the end of this where else you can go to get some more information. And this session, so like I said, it's part of a series. So we've looked at legal structures as well as impact models. So please do watch those if you haven't yet. Today we're looking at financing and funding. So I'll start off with defining social enterprise, just to make sure we are all on the same page if you haven't been part of this journey with us. Look at the broken market that social enterprises operate in, looking at a funding trap, which a lot of social enterprises can find themselves in as well, and then looking at different financing considerations and different options that are available to social enterprises. And kind of concluding that half of the session by looking at how to sustain your business on traded income, which is fundamentally what social enterprises are all about. We'll then have a showcase, like Sophie said, from an ethical supermarket, which is a social enterprise called Hisbe. And then we've got a Q&A with both Ruth, who runs that, as well as Heidi, another expert in this space, to answer any other unanswered questions. So, like I said, add those into the chat as you go, and we'll get started because we've got a lot to go through in this short hour. So just to give you an overview of social enterprise in terms of a sector, I'm using the UK as an example here because where I'm based, and also the information we've got here is easier to get. There are more organisations looking at this. So this is from Social Enterprise UK's report in 2018. There's around 100,000 social enterprises in the UK, and they're contributing at least 60 billion to our economy, which is about 3% of the UK GDPR. And they're employing 2 million people, which is about 5% of our employment. And in terms of early stage businesses, about 35% are looking at themselves as social enterprise models. So that for me looks like a really rising sector. There's a lot of potential in that. But something that's always kind of shocked me is that there's no universal definition for social enterprise, right? So there are different definitions that exist. A lot of big institutions are looking at how to get clarity around this. So when I look to defining them, I reached out and looked at what exists and pulled together what's similar. What are they all saying, and leaving out the bits that potentially aren't as synced up. So these are three core things I would say when defining a social enterprise. One is that they're mission focused. So they exist to tackle a social or environmental issue, which we set out in their governing documents, something that they would share in common with charities. Their surplus, as the profit that they make, they reinvest into their mission. So the majority of these profits that they're creating will go in the pursuit to fulfill this mission they have to tackle a social or environmental issue. And they are funded predominantly by trade. So their aim is to generate the majority of their operating income through trade. So we'll look at this much more in depth today, since we're talking about funding and financing. But we're talking about social enterprises today. This is what I mean, these types of businesses. I think it's worth highlighting as well that social enterprises is not a legal structure. Like I said, we've looked at this in another session, so do look into that if that's of interest. It is a business model, so that's worth highlighting. And when we look at it as a model, we look at it in comparison to other business models that exist. So on one side of the spectrum here, we've got traditional businesses. On the other side, we've got charities. And around the 70s, businesses looked to create corporate social responsibility, either departments or budgets, teams looking to contribute back into their kind of local or wider communities. We then kind of started seeing the rise of social enterprises, which kind of bridge that, like I said, very much with the mission of a charity, but looking to sustain the impact activity through trade. And then we've also got businesses defining themselves as business for good. So not set out to tackle a social issue like a social enterprise, but looking at how in everything they do in their business, they can be doing it better to sustain and positively impact people and planet. So on a spectrum, that's where social enterprise would sit. So those are the kind of businesses we are talking about today. So let's talk about funding and financing. So I said already earlier that social enterprises exist in this broken market. And what I mean by that is that normally social enterprises are offering something to people that normally can't afford potentially the full cost of that, of the impact activity. In this sector, we call them beneficiaries, the people who benefit from the social enterprise. And what that means for you as business owners or for the business owners running social enterprises is that they have to look elsewhere to create some income to sustain that activity rather than asking the people who are benefiting to pay for the full cost of it. So as I said, this is very similar to how charities work. So charities, again, are looking to get finances in to sustain their impact activity. And they predominantly look at donations and fundraising. So they'll go out, look at where funds exist, without having to give anything in return other than showing the impact, but they can ask for money to help them sustain the impact that they're having. It's a full-time job on its own. How it differs with social enterprises is they go, okay, we need to get some income in to sustain this. Let's look to trade. Let's look to get income through selling products or services and using the profits and surplus of that to then sustain their impact activity. It might be that that impact activity is kind of intertwined with the income generation. Again, we looked at impact models in the last session, so if that's of interest of how the relationship between income and impact, we looked at that in the last one, so do delve into that if that's of interest. But there's the main thing to highlight is that charities look to sustain through kind of funding and donations, whereas social enterprises looking at trade to be able to do that. I want to touch upon funding and donations because, like a lot of people already mentioned in the chat, you know, when you set a social enterprise, one of the key things I hear a lot is people going, it's great because we can get some funding. And when we're looking at funding, it's not something that doesn't exist in, you know, more traditional business world. You know, short-term funding and long-term funding to either get a project off the ground, to test something out. It's quite common. It might look a little bit different. And I think the key thing here is how you sustain the majority of your business activities. So when you look at short-term funding, you might, look at something to get a project off the ground, test something out that's new. You might have a one-off project as well that you're looking to get some funding in, or subsidize your offer as well. But I think it's important to talk about this funding trap that gets talked about as well with people who support social enterprises. And it's very much, it comes from a good place of intention of a dream of sustainability, of someone setting up a business going, I'm going to get some funding to get it off the ground, test it out, that's all great. But what happens is that they don't then create the space and time to look at how they will sustain it. So the idea is get some funding it, they'll test it out, sustain it, find a sustainable income, and then grow. But the reality for a lot of social enterprises is they'll get funding, they'll have all their attention and capacity looking to run and deliver whatever that is that they've committed to in terms of funding. They get at the end of their funding, the project, they haven't had any time to look at how they sustain it, and they have to go and get more funding just to sustain the business, otherwise the business would close. So it ends up going in a loop and you're constantly getting funding. Now, this is not a bad thing. Like I said, this is what charities do. They go out and fundraise and they go to look at donations to sustain it. It's just not what a social enterprise is. A social enterprise really are looking at how they can sustain themselves through traded income. So that's also why today I wanted to look a little bit around how to do that. So I wanted to just highlight this as something to watch out for, something that's very common in the sector. So if it's not funding, let's also look at other financing options and considerations to take. So I've just highlighted a few of them here, the kind of most popular ones, and also some considerations to be taking. So we can look at crowdfunding. I've identified it here specifically as rewards-based crowdfunding because there's also equity-based, but I would see that as investments, so investments on there as well. Loan financing, investment, grant funding, trade, and also shares. So to give you a very quick overview. So if we're looking at what stage of business you're in, here's some things to consider. So crowdfunding is really great if you're getting a new project off the ground. So if you're starting something new, that'd be great. But also if you're starting something like a new business, that's works as well. So it could either be a new business, new project, people like things to get excited about. So crowdfunding is great for that. For loan and investment, the people who are giving you money are going to look at de-risking it for themselves, and that means that you've got something already happening. They want to see traction, they want to see that you've actually, when you're looking at projections and looking at forecasting, it's coming from something that exists, not just assumptions. And I would say actually for yourself, that's also really important, because you don't want to be getting money in that you don't know if you can pay back. So you're more likely to look at this kind of investment if you've already started trading for at least a year or two. Grant funding, any stage, I would say again, credibility and your track record is something that they'll consider when you're looking at grant funding. It's really competitive, but you can start something new and have grant funding to get it off the ground. Trade, any stage, you can access that, and shares as well. At any stage of the business, you can get shares. It's worth noting that legal structure will have an impact on these different financing options, which we kind of touched upon in the last session around legal structures. So here's going a little bit deeper. So with rewards-based crowdfunding, you can have any legal structure. The loan is the same. When it comes to investment, they are looking obviously to take a percentage of your company, so you need to be able to give that. So some legal structures, such as ones limited by guarantee, you aren't able to give away, or also to charities. So you need something that's limited by shares. On the flip side, grant funding, it will be different in terms of each funder will have a different criteria around this. But predominantly, they also don't want to be giving money to businesses who can then give away money. So they normally will be looking at companies that are limited by guarantee or again, a charity structure, so they know the funding they're giving you is going to stay within the company. Trade, flexible, any legal structure. And when it comes to shares, obviously you have to have a company that's limited by shares to be able to give them out. So if you're looking at that kind of financing, consider that when you're looking at legal structures. In terms of repayment and what you give back, so crowdfunding, you give back rewards. So obviously you get money, but there's a cost and also what you're giving back. Ruth, who's on the call today, will be talking about crowdfunding, so we can ask her more questions about that if you're interested. In terms of a loan, you'll get a percentage that you have to return, and you have to pay back the whole investment, as well as a percentage on top of that, which will be set by the loan company or bank who's giving the loan out. In terms of investment, it'll be a percentage of the profits that will be agreed by you and the investor. Grant funding, you don't have to give any of the money back. You do have to give a lot of time in terms of reporting, but no financial impact there. And when you're trading, you're obviously going to be giving away a product or service. And when it comes to shares, you're giving away dividends. Now, the other thing I think is really important also to look at is how much time it takes to access this. So crowdfunding, again, I'm sure Ruth will talk about this, it takes a lot of time to do it well. You have to plan a lot to actually get to the point where you can be launching a campaign that's going to be successful. So you want to give it a couple of months to build up to that. A loan is dependable. You can actually get a loan pretty quickly. Obviously, there's a lot of companies out there called loan sharks in the UK, at least, who aren't very ethical. So you have to be really cautious about it, but it's actually can be quite quick to get some capital in. Investment, I put a couple of months as well, because in the investing world, it takes time to build relationships, to prepare things like pitch decks, look at your financing, look at how you're going to forecast. It takes a lot of investment to look at that to kind of get the money in. Grant funding is the same, takes a lot of time to go out and find the right opportunities, to write bids. Again, it needs a lot of research and information inside of it to put forward a good bid. So very much like investments, you have to prepare a lot to put forward your case. And sometimes you have to also wait to hear back and wait for the money to be released. Trade can be a few moments again. You can literally sell a mug to someone on the street today if you wanted to. It can be pretty quick. And shares, again, it can take a couple of months depending on how you can reach out to your crowd, get shares kind of going as well. So a lot of it isn't very quick. A few of it can be, but just to give you guys a realistic kind of overview. I've also put in here a couple of other things that I would always highlight when people are looking at different financing options. So with crowdfunding, the clue is in the name. You really need a crowd. You know, there's this kind of image that people like put something on a crowdfunding platform and it suddenly becomes really successful and popular, which is just completely false. You need to do a lot of work to build the crowd around you to actually get the first bits of money coming in. To actually, it takes a lot of work. So, and you need a crowd to be able to do anything. With a loan, I mentioned before as well, make sure you can repay it. So it's great to get some investment in. If you get to a point where you're actually not able to pay it back and you put the business in debt, give yourself a lot of stress. So really forecasting, looking ahead and going from existing activity is really important here. Investment, specifically, I've been talking more about like angel investors, like individuals rather than institutions, building relationships, taking time, find out people who know people is the kind of best way to kind of find the right person to invest in your business. When it comes to grant funding, key message I want to share today is that it's not free money. It takes a lot of time to put in funding bids. It takes a lot of time when you've got the funding to report on it, to deliver on it. It's not the kind of easy money that sometimes people think it is as well. When it comes to trades, you really need to know your market, know who you are selling to be successful in that space. And in terms of shares, it's lots of small bits of money. So you can't always raise maybe potentially a lot of money, but you could get a little bit of money here, there, and everywhere. So in terms of how much you're looking to get, that would be a consideration I would take. So that's my kind of overview of different options, which we'll share with you as well after this session. But just to finish off this last section of the webinar, I wanted to look at and touch upon sustainable kind of traded income for social enterprises. Something I'd really recommend is, start trading as soon as possible. You're testing out your price as much as your product or service. A lot of people I work with always are like, oh, we'll give it out for free. We're just testing out if people want it. But actually pricing is part of the testing. And if you can start bringing income and trade in from day one, you've got money that you could play with rather than trying to go out and source other sources of income. So start trading as soon as possible from day one. If you are getting funding, look to get enough to build your capacity so that you can grow into traded income. Don't get caught in that trap of just getting enough to run a project over and over again. Plan it out. How is this funding actually going to help you grow? Look at forecast, look ahead. And the last thing I think which is important in the sector for people who've got big hearts is really knowing your value and charging it. You're offering something really valuable to people, especially if you're looking at the traded market. Even if people aren't potentially in your beneficiary group and they're people who are customers, what you're offering is an opportunity for them to support and get better products, supporting better businesses. Know that as your value, charge for it. Don't make it hard for yourself. The amount of businesses I know who are struggling because they're just not putting the right price on what they're doing, you're making it harder for yourself. So go out, know your value, do your research and get trading from day one. That will actually help you sustain your income. And then if you need funding later on or a little bit to kind of get off the ground, you can look to that. So that's what I'm going to leave you with for now, and then hand over to, first of all, our showcase today, and then over to Sophie to host the panel. So we have today, hopefully Ruth's going to suddenly pop off mute and say hello. So I'm working really closely with Ruth. So Ruth's actually the other co-founder of the Good Business Club. She's super busy. You'd wonder how she has the time to do all these things, but she runs an ethical supermarket called Hisbe, which stands for How It Should Be. And they're looking at how they can completely change the supermarket system. So they buy from local ethical suppliers. They pay their suppliers more than the going rate. They pay their staff more than the going rate. Everything they source is ethical or from good companies. And why I've invited her today to come and share her story in terms of funding and financing is they've raised 2 crowdfunding campaigns really successfully. They've got investment as well, and their business is sustainable on traded income. So over to you, Ruth. You've got about 10-15 minutes to share more about your story and top tips for these guys. And then I'll hand over to you, Sophie, to host the panel.
Thank you, Sara. Hi, Sophie. Hi, Sara. Thanks for bringing us together like this. I know people find it really useful, and it's good to see your faces. Yeah, I'm Ruth. I'm a co-founder of Hisbe Food, and Hisbe Food is out to challenge the unsustainable and exploitative food industry. And we defined this massive issue out there that the way we currently do food is not sustainable. You've got endemic exploitation and environmental damage and negative impacts for community and suppliers and all sorts of problems going on in the food industry that need tackling. So 10 years ago, my sister and I decided to tackle this, and we figured we'd have a go at reinventing supermarkets. So if you start where people are in supermarkets. If you can reinvent what a supermarket is, what it stands for, and recreate the business model, and have supermarkets go that way, then you're going to transform the food industry. So in a nutshell, that's what it's about. And you know, Sara said during her opening that this is about a social enterprise is about a business model, and generally a business model that counters the traditional business model. And the traditional supermarket business model is all about short-term profit, and it extracts values from community, it extracts maximum value from suppliers and customers, and it's all about sustaining that organisation rather than doing what's right for the future of food and farming. So yeah, we created this supermarket, which you can see here. It's been open for 7 years. And we set about turning the model on its head and defining every aspect of our supermarket to be sort of in line with sustainable food and farming. We have what we call the Hisbe way, which does that. So 8 areas that are completely different to the way regular supermarkets work. For example, there's an area which is about valuing people, where we pay what's fair to suppliers and staff, paying the real living wage. For every £1 that you spend in the store, we give 68p to suppliers. So I'm not going to go through all the 8 things, but we do lots of different things, from saving plastic packaging by selling stuff loose, to paying people well, to never throwing away food. There's a whole host of stuff that we do. But yeah, so I just wanted to sort of focus more today on the finance journey, and specifically the crowdfunding elements, which I know are a point of interest. So yeah, when we started, it was Amy and me and my sister 10 years ago with an idea of how it should be, which is what Hisbe stands for, and no one would take us seriously. You know, we rocked up to several banks, which I highly recommend doing, taking a business plan to Barclays, Lloyds, all of these guys. They all have small business advisors, and they will sit with you and give you free advice and go through your business plan and kick it about. You know, we got a good kicking, where it became clear that the bank was never going to loan us the money to start up. But one of the key things that I think it was the Barclays guy said to us was, you need, you know, if you have proof of concept, this will make all the difference. So we were like, well, okay, how do we get proof of concept? And that's why we did our first crowdfunder. So we had found the premises, done the business plan for the premises, and we needed money in the pot. We needed to raise 200 grand to do it right. And so we started a crowdfunder for 30,000. And it was a rewards-based crowdfunder. Back in the day, it was quite a new idea. I think, you know, people are much more used to crowdfunding then, but it was quite a novel idea at the time. And we basically, people bought money off vouchers for a store that didn't exist yet. So we had the premises and we sort of blued out the windows, and we sold 30 grand's worth of money off vouchers to hundreds of people. And we did it because they loved the concept. You know, it was the crowdfunding page was us in the empty shop, showing it. It was a bit of a tip, explaining to people what we wanted, and the crowdfunding enabled us to raise that 30 grand, which we then leveraged with other people. So we were able to go back to social investors and go, look, we have proof of concept, we've got a great business plan, we know we can make this work, and we've got 30 grand's worth of vouchers out there and a ready customer base and a lot of people who want this. So, you know, crowdfunding isn't just about raising of the money. It's a fantastic PR and marketing activity, and it is proof of concept, and it's a leverage for other more traditional, more cautious investors. And also it's just great. You know, you can get hundreds or thousands of people behind your idea. It's a really nice democratic way to raise money. And like I say, we leveraged it to raise the rest of the money through shareholders, small loans. We had an angel investor, gave us a grant, and we tied up with Triodos Bank. But it all started with the crowdfunding. And then as we, you know, our sort of second stage of raising money was about getting the store profitable. So right from day one, we had enough customers in the door. We had really good sales levels, but as anyone will know, running a retail operation, it's all about the profit and the money that you get to keep, not the money that comes through the tills. So we weren't profitable in the first year. And we identified several profit and sales drivers that needed to happen in the store, areas of the store that customers loved, but we needed money to expand them. And so we raised money to do several projects by going for small grants and for going back to our shareholders and supporters for small loans. So, you know, that was sort of our second round of fundraising for small amounts. And then after that, the shop was profitable, going back to 2015 now, and we were interested in how do we open a second store. So we did, I would still call it a crowdfunder, but it was sort of a private crowdfunding operation. It was behind closed doors. We did an event. We found a great premises in Kemp Town and did an event to raise the money to go after that premises. And we got all of our supermarket rebels, as we call them, all of our supporters and friends in one place, and launched a loan offer to them. And somewhere in here, in the comments section, someone's put about SITR. It was an SITR-backed loan offer to the people we already know. And we raised money for a store that then fell through. And that was a tough year. You know, it felt like a big failure. But luckily, one of the great things about raising money from people who care about what you're doing is that they forgave us and stayed with us. And thankfully, the people who participated in that were happy for us to keep the money and keep looking for a new premises. Unfortunately, the landlord gave the premises we were after to Starbucks, which always ticks me off when I go past it on the bus. Anyway, the third offer, I'm just putting some links here in the comments. The third sort of activity we did was this. If you want to have a quick look at it, I've put the third offer was a big loan with Triodos last year. So we found the right premises in Worthing to do our second store, having lost one and being very disappointed. We kept on and we decided to go to Worthing and found the perfect premises and went back to Triodos. Always liked the idea of crowdfunding because it's just so democratic. It's open to anyone, whether you've got 50 quid or 50 grand, you could participate in Triodos's crowdfunding platform, which has been very successful, including for us. And I like that. I like that, you know, you can access a high interest investment and be part of something no matter how much money you've got. So, you know, we raised 450 grand last year by doing that, by doing loans through Triodos that again are SITR backed and have a great return on interest for investors, as you can see. So as life would have it, shortly after signing the premises on the new lease and raising all this money, COVID hit, which put a great big spanner in our works, but that's a whole other story that I won't go on about now. But the final point on here is a new crowdfunder that I've just made live this week. It's not live to the public yet. Well, I'm not pushing it with the public yet, but have a little sneak peek, again, just as an example of a different type of crowdfunder. So this is about donations, and it's about donating money to us so that we can donate food to others, sort of in the spirit of festivity and just helping keep people afloat with food at this time of year. So the idea is it helps us and it helps us help others. So, you know, we've done a rewards-based crowdfunder, an SITR-backed offer, a loan offer, a bond offer through Triodos, and this donations-based crowdfunder, and learned a lot along the way. I don't know if do we have a questions opportunity now, Sara? Because I think I've taken up 10 minutes.
No, that's great. Yes, we're going to open up.
To rattle through what we've done and then give people the opportunity to ask questions about it.
Brill, yes. Thank you, Ruth. And we're going to have Sophie host the panel. So as well as asking Ruth questions about her journey, we've also got Heidi Fisher here, who is a chartered accountant, and she set up the first UK's social enterprise chartered accountancy firm, and also got an MBE this year for her contribution to social enterprise around innovation and impact measurement. So yeah, amazing. Thank you, Heidi, also for joining us. And Sophie, I'll hand over to you to manage the Q&A. And yeah, any questions you guys have got. And yeah, let's see what everyone has to say.
Thanks, Sara. Thanks for that, Ruth. That was really interesting to hear about those, you know, the different ways that you've managed to raise money. Just while waiting for some questions to come through, I guess a question I would ask is, with the loan that you did, the loan offer through Triodos last year, what are the terms on that? When will you need to start repaying that? You know, how does it work?
Okay, so it works is that it's a 7-year loan. So what was great about working with Triodos is they did a lot of the financial modelling for us, we don't have a accountant FD, so it's a great asset for us. So yeah, it's over 7 years and it's a 5% return each year. And then the idea is that, you know, in the meantime, we want to recapitalise and bring more money in, probably through a shareholding. But, you know, we pay the whole thing back, the 450 grand in year 7, and then we're paying interest every year in January. But the idea is, in the meantime, we get 2 stores up and running and on full throttle, which enables us to pay back the loan.
Great. And the crowdfunding campaigns that you've done, have you run those yourselves, or have you had sort of an agency that you work with? Because I know with crowdfunding, a lot of it's in your reach, isn't it? And the amount of people you can get out to with that campaign. So how did you handle that?
Yeah, we did it ourselves. I mean, one of the key things to note is it's important to build an audience first. So when Amy and I started, and it was just us at our desks in our flat, we started our blog, we started our social media platforms. Twitter was new at that time, believe it or not, and we had to learn how to use Twitter. But yeah, we created a following and a support network for 2.5 years, nearly 3 years before we launched the crowdfunder, and that was key. So yeah, we managed it ourselves because we'd brought people along on the journey and got them enrolled in the concept already. So we've always looked after the crowd, and when you look after the crowd, they look after you.
Yeah, fantastic. We've had a question come through from Adrian. I think this is to get both of your input, so Ruth and Heidi. Adrian said social impact bonds and quasi-equity seem to be increasingly talked about as the ideal ways to finance social enterprises, but there is research that seems to show that maybe they're not all they cracked up to be. Do either of you have any perspective on that?
I would point to the Triodos crowdfunding platform, which is Bonds, which is highly successful, and several local projects that I know, mostly in the green energy sector, that have been successful. So I don't probably know much more than that about it, but I don't know of any sort of negative research on that score.
Sure.
I was going to add to that. Yeah, there is some research out there. I think the Connect Fund have been doing quite a bit of work around the quasi-equity and looking at the models and approaches that actually work around quasi-equity. Those of you that don't know what quasi-equity is, it's basically a mixture of debt and shares. So whatever you structure your financing as, it has some of the elements of a normal loan or debt finance, but it also potentially has some of the elements that you might see with a share. So it might be that you get a fixed dividend, for example, or it's related to the increase in your turnover or income. So I think that the main issues that come from it are are that the organisations don't understand what they're getting into, and neither do the investors. And in that the modelling of how that will be repaid or when it will kick in is potentially not done in a way that allows the organisation to become sustainable, or the point at which the repayment or the interest or dividend or whatever it is kicks in is not actually a viable point, because it hasn't been financially modelled properly.
Okay, thanks, Heidi. While I've got you on screen and with your financial expertise, could you share some tips on how social enterprises can make grant funding work for them, sort of getting started on that journey? So I know that we always talk about, you know, you need to focus on traded income as a social enterprise, but I think we all realise that sometimes grants are necessary in the early stages. So do you have any advice on that, on how they can use that as an option starting up?
Yeah, so obviously with most grant funders, they want things packaged in projects.
Mm-hmm.
So you've got to somehow make your testing of your product or service into a project in most cases. Having said that, what we've seen over the past few months is that some funders are moving away from that approach to just giving you money and letting you do whatever you want with it, which I personally think is a better approach, because once you start getting into projects, you've got an issue. So the way to use any funding or grants is really to test that what you want to do works, to perhaps innovate and trial something new or additional as you go along in that process, or for something where you can't find a paying customer. So where you know that it's never going to be anything where anybody, whether that's a public sector body, a private institution, or individuals, would actually pay money for that support or service, because there just simply isn't that money there. But I think the biggest tip is that even if you do have grant funding, is to make sure that you don't spend 100% of your effort and energy just focusing on delivering whatever you've got grant funding for. You also need to spend time making sure you're developing your products and services and trading income at the same time. And that is probably, again, one of the biggest mistakes that people make. They're like, oh, we've got some grant funding for a year. Let's sit back and relax for 9 months. And then they start to panic and think about the fact that they don't have any trading income a couple of months before the funding runs out, and by then it's too late to do anything about it.
That's a really good point. Thanks for that, Heidi. On the grant subject, we've had another question come in asking if grant funders favour a particular legal structure for social enterprises.
Well, I wouldn't necessarily say specifically for social enterprises, but grant funders obviously primarily favour charity structures, in that pretty much every trust and foundation that I know of will give funding to a charity. The next up then is things like CICs, limited by guarantee, cooperatives, community benefit societies, anything that's got some type of asset lock in place. And then after that, you've got your CICs, limited by share, and other types of social enterprise structures, such as just straightforward limited by shares that have got within their articles a purpose, which are probably going to get very, very little funding.
Okay, great. And another question for you, sorry, Heidi, is from an impact perspective, are there any organisations that you recommend looking at who are particularly good at sharing the outcomes that the funding or income has had for them?
Yes, there's quite a lot of organisations that have really nice impact reports and are able to demonstrate it. I mean, I could go on with a whole long list of names of organisations, but I think what they all do is that they focus on measuring 2 or 3 things really effectively. They don't try to measure too much. They use case studies and feedback to really tell their impact story effectively and well. And that's the most important part, really, is that you have that balance between the numbers and the story, and if you can get that right, then you're doing a really good job. But there's absolutely loads of organizations that do it really well, but the key thing that stands out for most of them is that they've thought about how they want to present that information. So whether that's through some kind of really nicely designed report, an infographic, a video, or some other type of materials that they're presenting. So I'm not going to name names.
Sure. Ruth, could we get your input on that? Has Hisbe done much in the way of impact reporting, or have you had to report back to people that have funded you in the previous campaigns?
Yeah, I mean, we have 8 areas that we report our progress in, and we are increasingly looking at targets with. So, for example, one of our 8 elements of the Hisbe way is waste and low waste. So, promising never to throw away food that can be eaten, which shouldn't be revolutionary, but is. And waste packaging, we minimise packaging waste and plastic packaging, and we're zero to landfill. So we measure those elements. So I know that since we started, we've saved 880,000 bits of plastic packaging by selling certain areas of the store, just selling loose. And I know we've saved 90,000 kilograms of carbon emissions, and it's very important to us to measure these impacts alongside our commercials. And that's really what we're offering our investors. When someone invested in the Triodos bond, they know that we're doing both they're doing both social impact investment and they're getting a financial return. And it's sometimes it's really simple things like, when you spend £1 at Hisbe, we spend 58p in the local economy in Sussex, whereas other supermarkets export and centralise profit and keep only 5p local. So things like that have been there since the beginning, and we've evolved them and changed them and improved them over time, but the principles have always been there. And it's taken us maybe 6 years to get them all into a really nice reportable format with clean measures against each one. But yes, that is important to us, and generally that's what people want to see.
Great, thank you. Got another question has come in from Nina. She says, it seems there aren't many banks that will accept startup CICs. I know Social Enterprise Mark have actually done a lot of research into barriers to finance with the banks for social enterprises. So this is an interesting question. She mentions that it just seems to be the Co-op Bank is the main one that seems to accept them. Do either of you two know of any others?
Yeah, Triodos Social Ventures.
Yeah, so just as Adrian's just popped in the chat, at the moment the problem is that a lot of banks have put all new applications for startups on hold. So it's affecting anyone that wants to start up or has started up recently. So what a lot of CICs and new social enterprises are having to do is use some of the more online banks like Starling, etc., just to get an account set up so that you have a bank account to get started with, even though there then potentially is an issue in that some funders won't accept them as acceptable bank accounts. But in normal circumstances, people like all of them, the mainstream banks would typically and normally accept an application from a CIC for a bank account.
Okay, thank you. Sara, did you have any questions? So I think we've exhausted the ones in the chat.
That's all great. No, I put mine in there already, but that's great. Thank you, guys. I finished my section a bit earlier to try to get lots of questions in, because I knew it would be a popular one. Thank you, Sophie, for hosting that, and thank you, Ruth and Heidi, both for joining us today and sharing, really actually the more practical side of this conversation. There's a lot of theory and questions, but actually just like, what does it mean practically to do this stuff is really important. So thank you for that. And over to you guys. I'd love to hear what have you discovered today through this session, Obviously, as we're going along, we are kind of creating the kind of content for this based on the questions that we've been hearing as people who support social enterprises. And it's really useful to know really what's kind of hit the mark, what hasn't, what do you want to hear more of, anything that was missing, or what really that you've discovered today that's made a difference. So if you want to pop that in the chat, I also promised that we would let you know where else to go to get support. So one thing we'll do when we follow up with this recording, I'll also link you to the series. So this is the last of our series together. It's been, yeah, amazing to kind of go through this journey with anyone who's been here since the beginning. But it means that we now have got the whole series recorded and stored, so we can share that with anyone who wants to go back and delve in a bit deeper, either around the legal structures, impact models, or obviously this session. So we'll share that with you. Social Enterprise Mark, so they give out an accreditation, which is really invaluable, one for visibility in this market of being a kind of purpose-driven business. The Good Business Club are just in the process of getting our mark, which is really exciting. But the thing that for me really stands out in terms of support is that they've got people in the team who can help you when it comes to looking at legal structures or any funding and financing advice as well. So you don't just get a mark, you get to go through a process and have actually a specialist look at your model, what you're thinking about, answer your questions, give you confidence and clarity as well. So really amazing investment there. I also want to highlight the Good Hustle, which is a 10-week online course, the only one that I know for social enterprises. So if you've got an idea and you're looking to get it launch ready, they've got amazing kind of content, different modules, also peer support. So you go on a journey with other people. Like I said, it's all digital. They've been doing it for years, so it's not like a new space for them. So highly recommend that. And the Good Business Club as well. You know, I said Ruth and I set it up very much to bring together purpose-led business owners, because we really believe that you don't need to be going on this journey on your own. And when you're in a community of people who have a lot of different insights, expertise, and knowledge, you can tap into that whenever you need to. So you can be learning from what they've learned, you can be filling any knowledge gaps, and just actually having a community that nourishes you as you go along as well. So invitation there for anyone who wants to find their tribe to come and join us. I've got a blog piece that's got a summary of all of this stuff on my website, which I'll link to as well, so you can kind of click through and find out more details about that. So that is the support side. I just want to say thank you. Like I said, it's the last of our series. I was saying to Sophie how it's actually quite sad to come to the end of it. It's been really great to go on this journey. We know it's all a bit bite-sized and crammed, so if there's anything else that you've got questions about, do reach out to us. Love to hear where you are in your journey. If you need any more support, like I said, SE Mark do offer amazing things to help anyone who is not just launching, but also if you're kind of growing your social enterprise. And likewise, I'll be able to support you either through the club, or I also do kind of one-to-one and group sessions. So you're not alone. Reach out, and good luck as well on the journey that you're on. And enjoy the rest of your morning, afternoon, or evening. Bye, everyone.
Bye, everyone.